Thank you for tuning in to another edition of the Vulcan Report. This Vulcan Report is for trading on Friday, Take Back Friday, February the 2nd, 2018. Normally, I do not do videos on Fridays. I like to get a jump start onto the weekend, but because I have been poked and prodded for an end of day report because of what happened in the markets this week, people want to know. So you're getting a treat, special treat. All right, here we go. Let's jump right into it. First of all, for those that are new, postwavetrading.com is where you can go to sign up for the 7-day free trial to the premium trading room. You get the weekly post-wave price triggers, you get the free study course, and all the other goodies that I will not mention. You will have to find out for yourself. Go to postwavetrading.com and see for yourself. Learn how to trade these algorithms. Learn how to know and see what I know and see for yourself. All right, let's get into the video. So first things first, let's look at the Nasdaq. Let's look at the tech sector. All right, as you know, weekly charts are on top, daily chart right here, intraday 4-hour chart and 1-hour charts right there. All right, so if you take a look at the weekly chart, what happened? Well, market lost momentum this week. All right, it closed below the 67.82. Therefore, we have lost momentum. Can the market regain momentum next week? Of course it can. Do you see any carnage on the chart? Of course you don't. What do you see on the chart? Panic? No. Panic selling? No. You see profit taking. You see the market pulling back. It's not a correction. It's just pulling back. You see a pullback. This bar is really no different than this bar here or this bar here. Let's go back even further. It's really no different than this bar here or this bar here. Remember, these are weekly charts. It's no different than this bar here, no different than this one, no different than this one, no different than this one, and etc., ad infinitum. All right? Could you get action like this? Of course you can. It even dropped below the Kumo cloud, and what happened? It came right back up. All right? I am not impressed with today's price action. This is a runaway train bull market that is making all other bull markets before it pale in comparison. And I believe this is just the beginning. I believe we have 5 more years, give or take a few, of economic prosperity by way of algorithms and markets. I believe this is only the beginning of the grandfather of all bull markets. And this goes also for the crypto space, and we'll be getting into that in a minute. Yeah, I know you're looking at the intraday chart here and looking at these massive down bars. Yeah, I know you see it. I know a lot of you are shook, but this is what it is. All right. Now, beginning of the week, I made a video talking about crash alerts. If you paid attention to those crash alerts, then you were prompted to take some profit off of the table and avoid the landslide or trying to catch a falling knife by day trading and getting your faces ripped off. Hopefully you didn't do that, especially if you're a subscriber to the weekly post-wave price triggers. You would have known a lot of different things because I was posting throughout the week in the trading room, giving you heads up on different things in the markets. Let's move on. Let's take a look now at this Bitcoin situation because that's what everybody and their mama's talking about. Talking about the crypto bubble bursting and all this, yada, yada, yada. All right, first things first. Weekly chart, this is on the futures. On the futures, it's a bear market. It started off that way and just is progressing, hitting lower lows as I told you it was going to. All right, this is the weekly chart. I've been alerting you to this every week that's been going by. Daily chart, same thing. All right, you are in a bear market in the futures contract. Just deal with it. Where are all the gurus now? They were telling you to buy these, buy the dip, buy the pullback. Oh, it's just going to go back up again. I'm buying here. I'm buying here. Where are they? Where are those knuckleheads on YouTube talking about they was buying? Remember, they was buying here. They bought here. They bought here. They bought here. They bought. They're getting destroyed. They bought back up at 20,000. We hit 7,000 today. They're being destroyed. It's just what it is. Now I know some of the smart alecks are gonna say, "Well, I bought Bitcoin back when it was 11 cents. I bought it when it was $100. I bought it when it was $500. I'm still looking really good." No, you're not. You're looking like an idiot because you just gave up over 10 grand worth of profits. All right, working on 13 grand worth of profits. All right, you lost 13 grand. If you didn't take profit up here, you lost 13 grand. You're down, baby. I don't care what price you bought the Bitcoin, you failed to take profit. Therefore, you're getting destroyed along with all the other noobs who don't know the first thing about trading. All right, and if you were my accountant, you would be fired. Why didn't you get out and give me my money? Make me my money. You didn't. You got all the way down to here now. Oh, it's gonna come back. Yeah, but you don't know when. All right. You've heard me say that I don't think we've seen the highs in the Bitcoin or in those other altcoins. Far from it. Doesn't mean though we're not in a protracted profit taking environment right now. Excuse me. Remember, with the advent of the new futures contract, the prices have to get beaten down before they can let it rally again. They gotta take some of this fluff out of the market. Let the market do what it's gonna do. All right. When you let free market forces do what they're gonna do, they're gonna do what they do. You want that. You don't want government intervention and manipulation. You want the market to do what the market's gonna do. So let the futures contract do what it's gonna do. All right. Even if this thing falls another 7,000, what you gonna do? Let the market do it. All right. The cure for low prices is lower prices. That's how that goes. Okay. So let that happen. All right. So to those of you, it's just like gold and silver trading. All right. If you own the physicals, all right, you're long the actual Bitcoin or some Ethereum or Litecoin, whatever. You actually hold that in your paper wallet. You got that going on. Okay, cool. That's great. Then what I'm saying makes it doesn't care to you because I'm just holding it. It doesn't matter. I'll hold it forever. Okay, whatever. No problem. But if you are a trader, all right, if you're trading, you do care because you remember what I said at the end of the videos. What do I say? Take what you can, give nothing back. Take what you can, give nothing back. All right. So all I'm saying. That's why you need to come over to postwavetrading.com and learn how to navigate these waters. You'd have been alerted to take profit if you were long this market, especially in the futures. You can't play those games in the futures market or you will get destroyed. All right. You'll be on your way to bankruptcy. You can't just hold this indefinitely. This is not investing. This is trading. And a lot of people on YouTube claim to be traders. I didn't see not one video telling anybody to take profit off the table when this thing was up here at 20,000. Nope. People were buying, 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 coming in and buying some more, figuring out how could they get involved. And then look at this. I haven't seen none of those gurus say nothing about profit taking. It's like they flip flop on the bandwagon, whatever looks popular. All right. Now they're saying, oh, the crash, the smash, the blast. No, they wasn't saying nothing when this market was going up. Now that the market's going down, it's silence. I don't hear nobody talking about no trading courses or none of that now. They've been silent. They haven't made no videos or nothing. They just gone. Because they're not traders. That's what people do. When there's a new fad or something that come out, everybody and their mother makes videos. Oh, hanging up a shingle, they're professional. And then when things fall apart, boom, they're nowhere to be found. Did they alert you when this was coming? Did they tell you this was going to happen? No. But see, now the naysayers, though, that hate the crypto space are calling it a bubble. See, what do I tell you? I told you it was a bubble. All bubbles burst. This is not a bubble bursting. This is not a bubble bursting. It's not a bubble bursting. As a matter of fact, I've been trying to do a few things over here to show you a little bit, a little something, something. Give me a moment and I will bring it up for you and prove to you that this is not what it seems. Okay, here we go. Let's see. Okay, here we go. All right. If I can get this to work, I have a treat in store for you. And this will show you why you can't always trust the gurus. All right. All right. Let's see here. Now this is going to update further. Okay, here we go. I'm going to close out a few things. Let me move some things around here for you, and I'm going to hook y'all up. All right, I'm about to hook you up and show you what this really is and why things are not necessarily what they appear to be. Are y'all ready? Here we go. Let's move this around. All right, well, wait. Okay, here we go. Hopefully you can see this. All right. I'm hoping you can see this. All right. This right here is the Bitcoin chart of the actual Bitcoin itself. All right. As you can see here, the market appears to have fallen below the longer term trend line support, right? And it always looks too like the momentum is pointing to the downside and we're about to cross and get negative and all that stuff. You also see the extension of the bearish momentum picking up steam here, well established, yada, yada, yada. But I'm about to point out some things to you real quick. Are you ready? All right. Pay attention, folks. This week's trading situation is nothing more than filling a gap from here. And on the way down, you got another gap right here. Do y'all see that? Gap, folks. Gappage. Here, we made one on the way down. So right now, the market's just responding. It's coming down, and it's filling the gap. Remember that old commercial? Fall into the gap. Remember that? Some of y'all probably too young to remember that. But that's what we're doing. All right. Market just filled this gap, and we should be able to probably bounce from here at some point. Even if the market wants to just run it and clear the gap from here to here, that would take prices to about 7,000, between 6 and 7,000. If it's a flush out, it could get to 6,000 first, and then shoot back up over the next couple of weeks like that. All right, this is the weekly chart, by the way. Everybody tracking with me? All right, this is a gap here that is being filled up. Other than that, that's it. Okay? Capiche? That's all that we got going on, folks. How they say, oh, nothing to see here. All right? So, yeah, you're looking at around, see, like I said, so you had 8,370, and then here you had, yep, 889, and today the market hit 7,077 even on the futures, and then it bounced. So, yeah, that makes sense right about there. All right. So here you are. This is it. Now, if we go back further, all right, you had other situations like that before. Let's see if I can find the other cross. It's been a while. This thing's been running away so long. All right. Now, let me give you the other side of the story, though. We cannot ignore this right here. We got a possible crossing. It hasn't done it yet. Market can correct next week, like I said. Even if you get another bar like this, all right, for next week, okay, that still may not be enough to cross the momentum line with your intermediate trend line, all right? However, if the two do cross down, then you have a situation now where you have an official bear market on the weekly chart, and this is the raw Bitcoin. This is not the Bitcoin futures that we're dealing with. This is the raw Bitcoin. All right, so the long-term trend on the raw Bitcoin from a technical complexion is still bullish. On the futures, though, it's straight up bearish. All right, futures ain't been trading that long. So you can treat the weekly chart on the futures like a daily chart, if you will. So this is where we are right now. So that futures chart is acting like a daily chart, and it's showing prices leading down. So this is where we are right now. All right, so don't panic is what I'm saying. Doesn't mean that the bull run is over. And I'm not one to say bubble. It's not a bubble. All right, this is not a bubble. Not hardly. If it was, then all the exchanges around the world wouldn't be fighting over each other and stumbling over themselves to create Bitcoin futures and altcoin futures contracts. All right, just understand that, ladies and gentlemen. Don't be fooled by the rhetoric. All right, so you've seen what I wanted you to see on this. So let me put that back there. And what do I want to do? All right, let's come here. All right, let's go back to our other stuff. Okay, so I'm off my soapbox on the Bitcoin. All right, let's look at the US dollar. We're just jumping around, looking at a few things here. Let's see what's going on with the mighty dollar. All right, as you can see here, the dollar got down to that 88.43 and now has since trying to reverse. But is that rally going to be sold like this one back here? I'm saying that it probably will be. All right, this is an established bear market, locked in bear market. I think the rally is going to be sold next week. Only time will tell. But if it closes above 90.43 next week, then we've put in a short-term bottom. So we'll see. Now, the big one here, the big doozy, the bond market. Everyone's been panicking over the bonds, over the bonds. I told you what the story was with these bonds. We've been in a bear market, folks. Come on, we've been in a bear market. Deal with it. All right, momentum crossed back up in here, and you've been bearish ever since. All the prices have been doing is behaving like they should along the momentum line. In order for this thing to put a stop to it, it needs to close back above 149.07 next week. Fat chance, right? You close the day at 145, you're in a bear market. Of course it's going to go lower. All right, you're starting to get separation between your trend lines. All right, these resistance lines are pulling away from each other. The momentum's pointing down. It's trying to lock itself in, folks. It wants to lock in. And that's where you are right now. I'm not surprised. Bonds could fall down to the 120s. We're at 145 now. Could easily go to the 120s. All right. So I'm not surprised by that. It's in a bear market. It's been in a bear market forever. Look at this. It's been in a bear market, folks. Bear market. Deal with it. You crossed back here. All right. And this was the week of September the 19th, 2016, folks. We've been in a bear market since 2016 in the bonds. People just have a hard time dealing with it. All right, right here, your momentum shifted to the bull side temporarily. All right. Shit. Made people think we were going to run. All right. But you never got that cross. All you got was a bear market rally. And then here we go. Postwavetrading.com, folks, if you want to be alerted and know what's really going on in the world. All right, let's take a look at gold. What's going on with the gold? Everything that glitter ain't gold, right? All right, gold is still bullish. It's still hanging out. It kept that momentum, and it's good to go. It has the door swung wide open for another bar like this next week. All right, now here we went. We got up here. This was the bar that we needed to deal with. All right, we needed to close above 1351. Last week we closed it. We did close above 1351. So right now, closed above it. All right, so right now it's looking like it is a double top only because of this week's bar giving up that space, but not so fast. You can't really call it a double top yet. All right, because this is if this was a daily bar, you would say this is an inside day. Instead, we got an inside week. All right, we got an inside week, narrow range inside week, which means that this coming week should be breakout week. We're either going to break out and up or break down. All right, that's where we are. Okay, folks. Crossroads for the gold. Will it give up the ghost or will it break and rally above 1400? It's going to be interesting to see. All right, let's take a look at the silver. Silver wants to have the kind of similar story that gold has, but no, this is ugly. All right, this is a straight up bearish engulfing candle to the downside. It crossed below the support lines, the momentum support lines, the trend support lines, and fell outside of the Kumo cloud. It's down here, roasty toasty, falling off the cliff and out of the cloud. Now it can redeem itself next week and try to get back into this cloud and chill out, mellow out, sideways out up until April, and then avoid the vortex right here, and then try to avoid the second vortex in May, and then it may be waffling between 17 and a half, $18. It's possible. It's doable. It doesn't have to fall out of bed. All right, it does not. Even though this is a bear market, all right, it's really not doing anything except for giving back some of the bear market retracement off these bear market lows. So you're really still going nowhere per se. You can say the price is the same to this week, all right, as it was primarily back in September the 5th, September and the first week of October of 2017. So in all this time, you know, 3 months, market ain't gone nowhere. So technically, that's where you are. You're nowhere in silver. Silver is nowhere. All right, let's look at oil. All right, I did tell you way back here that oil wanted to try to hit $60. I've told you that a long time ago. Well, here it is. All right. What else do we know? We know we got mad rampage coming up in the summer. Now, you could say that's due to cyclical things. You have seasonal trends and tendencies. That's the driving season. So you'd expect that to happen. All right. And look, you're locking in on the momentum side. You're closing and keeping momentum each and every week. This week is no different. Should have more rallying into next week. But if next week it closes below 63.42, then you know that it's lost the momentum and something possibly has shifted. And you got trend line support down here at $58. And then below that, you got it at $53. So between 58 and 53 is going to be your support cushion in the oil to keep the trend line bullish, to keep the trend locked in on the bull side. And it could easily lose that perspective. Let's take a look at the Dow. We looked at the tech, but I want to pull up the Dow as well, lest you say, oh, you cheated. You only looked at the tech. Nope. Here you are right here. Loss of momentum looks just like the Nasdaq. All right, they're the same. Mad rampage coming up. It's about time people start taking some profit off the table. Also, this gives us a really good snapshot of what the Fed looks like unwinding their balance sheet this week. All right, as the Fed unwinds the balance sheet, what do they have to do? They have to sell. All right, they're selling. And when you have massive selling coming in, it pushes prices down, especially when there aren't enough buyers to fill all the selling. All right, so market's trying to find a floor. That's why everything is down. Look at your GDXJ. All right, let's pull that up and look at the chart. GDXJ, GDXJ, boom. All right, here's your GDXJ. All right, Looking like silver right now, isn't it? Same story as silver, with the exception that this is happening outside of the Kuma cloud, below the Kuma cloud. So this was already falling off the cliff, and it's trying to find support. So we'll see what happens. But I did warn you that it's possible to fall back down below 30 bucks. Keeping this up, it probably will. So we'll see if it can get its act together by next week. Somebody requested the SPX. So here's the SPX looking like the Dow, looking like the Nasdaq, same story. Mad rampage coming up, taking us into the summer. And all you're doing is pulling back possibly to the trend line support of 2671. That's possible. That's a 200-point drop, but even still, that's really no damage. That's just profit taking, which we really haven't seen. We haven't seen a market correction. So this thing could technically correct all the way down to the 2512 level. It's 300 points away, but it could do it and still maintain the bullish complexion. Markets are still uber bullish, folks. All right, they're uber bullish. All right, so there's nothing to be, getting rattled about unless you're an investor. If you're an investor, I don't know what to tell you because we trade over here. We're not investors over here. We trade. That's what we do. So we like to take profit and we like to give none back. So if I'm in profit, I like to take my profits along the way. That's what we do. We take profit along the way. That's trading. All right. Investors, they hope and pray. They buy and pray that the price increases. That's it. That's what investors do. You have no guarantee of price appreciation, nor can you say what time frame that will happen in. All right. There are too many factors that you do not control. But as a trader, you control a lot of stuff because you can control when and where you put your stops in and when and where you pull the trade and take profit. That's why I like trading. All right. I preach it to you till I'm blue in the face. All right. Let's look at the XIV, which told you ahead of the move. All right. Here you go. You got some sell, some crash alerts, and they manifested. XIV is already in full profit taking mode. It already shot past the first support of the 121. I told you that that's where we were headed. Did I not in the crash alerts videos tell you that we were going to fall from the 146 to the 120? I said, yeah, I know that's a lot, but look how quickly it did it. Look how quickly it did it. In 3 weeks, it did it, folks. 3 weeks. All right, here you are. All right, so I think it wants to find a floor around the 96.41 level. That's quite a pullback. But how can you say, what was me when look at this run up? Look where you've run from, folks. Look how long this run has taken. And you really haven't had but one little correction back here. All right, where you fell from the highs of 96 bucks, you fell all the way down 71 bucks. And then you went right back and boom, look at that. All right, you've been rallying for a long time, so now you're pulling back. All right, so sit back and relax on that. If you were long, you should have been taking profit. Should have been stopped out before all this carnage to the downside, and you would have been in profit. You would have walked away with your profits. No one should be long the XIV right now. You should be in profit on the sidelines, waiting to get back in, waiting for your next buy-in, for the next rally, for the next bounce. All right, either that or you're shorting it if you can short it, if your broker will let you or whatever, if it's shortable. If not, then your only alternative is the crazy TV, the crazy TVIX. All right, which looks terrible. All right, on the daily chart, what did you do? You rallied today from $6.30 up to $7.76. That's all you did today. That's all it did. That's barely a move. I know you people say, well, percentage wise, that's a huge percent. I don't want to hear that. I like dollars and cents, not percentages. So you would have been better off if you could have done it, shorten the XIV outright because it closed down 13 bucks today. or if you had the gonads to do so, you could have shorted the QQQ outright. But trying to locate shares, borrowing shares, blah blah blah. Some people are uncomfortable with that. You don't need to short. You could have just took your profits off the table if you were already flat. Stand aside and wait for your next buy-in. All right, that's how you do it, folks. All right, you don't have to short it. Just wait for your next buy-in. All right, long only strategies work just as good. All right, I got plenty of folks in the trading room. They're long only. Okay, meaning that they're not buy and hold. We're not talking about that. They're long only, mean they only look for buying opportunities when it comes to shares of stocks or cryptocurrencies or futures contracts. They don't short. They just go long. All right. There's nothing wrong with that. You can still make a ton of money doing that. You just have to take your profits along the way so you don't get smoked when things like this happen. All right. All right. I think I covered everything everybody wanted me to cover. I got hit with so much. Oh, did I do GDXJ? Yes, I did. Oh, let's look at Hack, because Hack has been over 30 bucks for the longest time. It came down and it got hit too. Okay, it's pulling back. It lost momentum. It's possible to drop to 31.75, which is right here. That'd be interesting to see. With all the uncertainties going on in the world, I think Hack's gonna break out and run past 34, possibly hit 35. We'll have to wait and see. It's just really hard to say right now. Another interesting one too is the nat gas. Let's look at the natural gas with the temperatures being the way they've been. It rallied, it broke out here, got all the way up to 362, and now it's crashed right back down to where it was. Now we close it at 288, folks. I mean 286. That's crazy, isn't it? Look at that. Almost a full buck move. All right, you thought you were going to do something up here. It was looking great, broke out of the cloud, and crashed right back down again. That's what happens when you have, warmer than expected weather and large stockpiles and storage. All right, that's what happens. All right, another thing I want to show you guys. Okay, GBTC. All right, it's moving right along with the Bitcoin. All right, and the Bitcoin futures, it's pulling back. All right, almost down to the trendline support of $10.09. Yeah, we had the reverse stock. I mean, not reverse, but we had we had the, yeah, you know what I mean, stock split. And so instead of it being a $2,000 or $3,000 stock, now it's a $12 stock. All right, so you got mad rampage coming up here though in June, which will put this thing sky high, possibly over 40 bucks sometime in July, maybe the beginning of August. So this is an interesting one to watch as well. But because of the restrictions, it's a penny over the counter type stock. So is OTC. You got to deal with the pink sheet part of it, meaning there's no pre-market hours trading, no extended market hours trading, yada, yada, yada. You're kind of blind and in the dark. You got to wait until the thing opens to figure out what you're going to do with it. And for those of you, yes, I'm still holding the BTCS. I'm long. And even though in the short term I may be wrong, it's not going anywhere. It's a penny stock. All right. So what do you want me to say? It's a penny stock. I can hold 1 billion shares if I want to. It's a penny stock. All right. So here it is. Drop below the Kumo cloud. You got mad rampage coming up here, and just in about another week or two, be hitting mad rampage up in here. But depending on what happens in the Bitcoin, it could drop below here and pick up a little bit more steam and get a little bit lower first. So it may get worse before it gets better. But you do have this rampage coming, so that could help. That could help catapult some prices. But more than likely, we're probably just going to trade sidewise until probably May. All right, this long extended sideways cloud extends through almost the middle of April. So then you got a vortex. We don't know if it's gonna shoot it up or shoot it down. I'm thinking it's gonna probably shoot it up. We'll just have to see where prices go from here. But we still got this pointer to deal with that has not been resolved. Uh, touching that 60 cents level. Then you got another one here, and you got another one here. Now this one was satisfied when you got up to here, but this one has never been satisfied. So at some point, the pointer will be touched, breached, and that's what I'm holding and waiting for. All right, so anything else? I think I've covered pretty much everything I need to cover for now. So with that being said, postwavetrading.com, come learn how to trade these markets, navigate these waters, learn what the central banks don't want you to know, which is you can run their stops too. You know, you don't just have to be the victim and have your stops run all the time. You can be the one turning the tables on them and running their stops. Show you how to do that at postwavetrading.com. And with that being said, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And have a blessed, safe, and fun weekend. Peace.